This is PM Express, and my name is Martha Krensolakwa. Today we're talking about Ghana's debt and how to sustain that, how to work around it and make sure we don't incur more, but manage what we have and see what we can do. Now, Minister of Finance and Economic Planning, Tepe, says our debt is sustainable, and we have been working around it. We have some measures in place to make sure that we manage it to our advantage. How sustainable is this? I'm asking you. I don't have the answers, but I have those who have the answers or can help us get to a point where we know what to do, assuming we don't know what to do. So this is PM Express, and my name again is Martha Krensolakwa. I have with me in the studio Emmanuel Bwedi, at my extreme left, who is from Imani. Welcome to PM Express. And I also have Dr. Godfrey Bokping, who is the head of finance at the University of Ghana. Am I right? Business School?
University of Ghana Business School.
University of Ghana Business School. Welcome to PM Express.
Thank you very
When
much.
we're talking about money, I want you to look money. Unfortunately, the money is not in our pockets.
Yeah.
The money is elsewhere. We are just helping find solutions to how we can manage so that we don't pay for the repercussions of all that. Well, what's your initial comments about Ghana's debt at this level where we are now, Dr. Bokping?
Well, there is a cause for concern.
Okay.
Because after the HIPIC relief in 2004, and then the multilateral debt relief initiative that we also obtained in 2006, practically our debt to GDP ratio came to a much sustainable level.
Okay.
But within the shortest possible time, we have climbed up very quickly to a level that would cause one at least to worry wisely.
I like that, worry wisely.
Yes, because I mean, if you worry overly without taking practical steps, it doesn't bring any dividend on the table. So there is, we are concerned because we are having to deal with this unsustainable level at a time when we are going through fiscal consolidation measures. And you also realize that we have revised growth in the media review, and once output dwindles, it has implication even for your own debt sustainability as well. So, but when we are talking about debt sustainability, there are indicators as well. Along the many indicators, we are not doing badly. Okay, so we can look at some along the lines of maybe the present value of our debt to export ratio, which is below the policy dependency threshold. We can also look at the present value of our debt service to export ratio, which is also below the policy dependency ratio. We can also look at maybe the total debt itself to GDP ratio or to export ratio. But along the lines of debt service into GDP ratio or debt service into revenue ratio, we are not doing well.
Okay.
We are not doing well.
We'll go into details about that. But Emmanuel, are you worried that we've climbed up so fast within a short period? Is that your concern as well in our debt?
Yes, because strategically, the concern comes from debt usage. When you are borrowing and you are investing in self-financing projects that can clear the loan within a tenure, then you don't care about borrowing more. But when you are borrowing and you are investing in projects that are not self-financing, there are a lot of implications to that. If you look at the debt overhang effect, it has serious effect on investment, output growth, which also has effects on taxes to finance your project. So, of course, there's concern, but you have to put it in the context of debt usage. That is where we have to look at it.
But are we making progress with our debt servicing?
No, we are not, because the economy is not growing in order to generate enough cash flow to be able to service the debt, and that is where the concern is.
So what are we doing now? We borrow to offset our debt?
Yes, we are doing a lot of rollover.
Okay.
Yes, so when the debt matures, we don't have the money sitting somewhere to go and use, so we have to borrow to retire the maturing debt, and sometimes we are borrowing at relatively higher rate to retire owe debt. That's what we are doing, and we are not the only country doing that. A number of countries do that. But I think that the real issue, like my colleague said, is whether those monies were invested for productive purposes. If we had done that, then really, I mean, even if we do 70%, for me, that is not too worrying. If we can point ourselves to the productive investment that we have made that is able to generate enough cash flow to contain that debt. But if the numerator in terms of the public debt is not justified by the fundamentals of the economy, then you are exposed. I want to also believe that Ministry of Finance is doing something about it with the debt.
You want to believe?
Because I want to believe because seeing is believing in the realm of finance, really. I mean, it doesn't come so much to faith at this stage now. So I want to believe that the measures that they have put in place certainly will take some time, because we should have introduced many of these measures just after the HIPC relief and the multilateral debt relief, something to guide our borrowing, because our debt to GDP ratio was more than 100% pre-HIPC. And after the HIPC relief and then the multilateral debt relief, I mean, our debt to GDP ratio was less than 40%. I mean, at some point it was less than 30%. Then we should have introduced many of these policies that should guide how we enter the market. So you realize that the physical space or the borrowing space that was created as a result of the relief or the debt forgiveness that we received, I believe that we didn't
manage it well.
And I believe that we miss it from that point. And even though now we've introduced many of these measures, I want to believe that these measures are in themselves coming at a time when there are so many restrictions in the economy. You understand that we are going through physical consolidation, I mean, which in itself it's imposing some cost on the economy, because in the short term, consistent with the requirement of the physical consolidation, we expect that output would dwindle. We have to give up something, which is growth and then employment. And then in the medium to the long term, growth will then pick up. And around that time, you have these debts hanging. So you realize that
you think our system is choked already, so managing these things are becoming difficult?
Yes, because it's a little difficult, because it doesn't depend only on debt management now. The most effective way to manage your debt is to look at the overall economy.
Okay.
So
Emmanuel, talk about some of these indicators we were looking at. He mentioned earlier that we're doing well in some areas, we're not doing well in other areas. Which areas do you see us doing well and that can help us in managing this crisis?
Well, if you look at the debt dynamics, involves the primary deficit and the difference between the interest rate on the loan and the GDP growth. So if you look at that framework, you will see that now the primary deficit is widening. Now the interest rate on the Eurobonds is about 10%, and your GDP has decreased from about 15% in 2011 to a projected 3.9% in 2015, which also widened the gaps.
It's been revised to 3.5%.
3.5%.
Yeah, after the review.
Yeah, after the media review to 3.5, which widens this gap, and invariably your GDP grows from this analysis. So for me, and when you look at our export too, if you look at the exogenous shocks that came in the 2014, the last quarter of 2014 and the first quarter of 2015, you see that this comes to what shrink the basis of repayment, as the GDP. And for me, I want to disagree with Doc. I don't see that the debt variables, we are doing well in another, because if you look at the refinance from export, if you look at the GDP and the primary deficit, these are very key to the evolution of debt dynamics. I don't think we are doing well in each of them. So I disagree with Doc here.
He thinks you're not doing well in all of them, in any area at all.
I think that if you just look at debt to GDP ratio, it's just one indicator of debt sustainability, there are other indicators.
Sure.
Okay, so you can talk about present value of debt to GDP ratio. You can talk about present value of debt to export ratio. You can also talk about present value of debt to revenue ratio.
Okay.
Debt service to export ratio, and then debt service to revenue ratio. I mean, and there are policy dependency thresholds that the IMF and the World Bank, or call them our development partners, actually use to determine whether your debt level is unsustainable. So along some of these indicators, we are not doing badly. Okay. If you look at where we are,
not that we have excelled,
not that we have excelled, but
indicators.
At least
average.
If you look at maybe present value maybe of debt, okay, which actually looks at the future cash flow, essentially discounted, okay. But where we are not doing well, which is obvious to everybody, is actually when it comes to debt service to revenue ratio, because we are spending almost 25% of our revenue to actually service debt, and that is not sustainable.
How does this affect the economy? Yeah,
it's you see, when you spend almost 50% to just pay wages and salaries, gratuities and the others, and you spend another almost 25% to service your debt, your flexibility is very, very limited. Okay. So you are unable to budget for or spend a lot of money for capital projects, and your future depends on how much you actually spend on years in that area. But we don't have that money. If you look at the 2015 budget, how much we actually allocated for debt servicing as a percentage of GDP is actually higher than how much we allocated for capital expenditure. And it means that you are not preparing for tomorrow.
Yes,
you understand
we are
that?
living today.
Yes, we are living today. And that tells you that any time you want to do any infrastructure project, then you have to borrow.
Okay,
and then you don't also have that borrowing space to do a lot of borrowing, and yet you have huge.
You lack credibility, but you borrow, you can't service. Who wants to lend you money?
Yes, I mean, but there are people who would want to take that risk. Along investors, we have risk-averse chicken, and then we also have venturesome lion investors. But you pay a price for coming onto the market unattractive.
At that time.
Yes, you pay a price, and that is why you don't want to get to that level in the first place.
Okay. Just a quick one to what Doug said. If you look at the present value of revenue to GDP ratio that Rev is talking about, it is based on the IMF World Bank framework, which they project these kind of indicators based on macroeconomic assumptions about the future. If you look at the time frame, they project from now to about 20 years, and they review it every 5 years, every 5 years. Now you are assuming the economy, how the economy will behave now, how it will behave in the future from the past values. You are assuming you are assuming what will happen in the future. Then based on that, you project these indicators. For me, there's a problem because the future is highly uncertain. The future is highly uncertain, which makes these indicators very difficult for me to accept. Now, you make macroeconomic assumptions about GDP, about deficit, about interest rates, about export, exchange rate, and all these variables, which are very, 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 very volatile. They change anyhow, depending on the shocks that comes into the economy. So you, based on these assumptions, you project that, oh, this is how we are doing in terms of present value, and then you count this way. I would decide, let's look at the primary factors that affect our debt dynamics. And essentially, the GDP, the primary deficit, and the difference between the interest rate on the loan and the growth rate of GDP. If you have this perspective, then we're going to know how we are going to finance our debt and how our debt is. All
right, let's move the conversation forward to, you mentioned, you both agreed on the fact that we are not investing the monies so that we can get returns, and then when it comes to servicing the debt, we know that we put the money here, we can take from here to pay. What happened to the sinking funds? As the finance minister mentioned in the mid-year budget review, that has yielded, is it $100 million that is going to be used to pay some debt, so that when it's time, I don't know if I'm getting it right, but when it's time, you don't need to now go and pick the whole money from wherever you are going to borrow sometimes, you're going to pick from elsewhere to pay. But you have this fund matured because you invested it purposely.
For the
payment of debt. Is that not what we are doing? So, or we just started it and you don't think it's yielding now?
But I think that if you set up a sinking fund, but essentially you have to generate the cash flow and set it aside into the fund. And the fund itself will also be generating some interest, such that at maturity the fund would have accumulated enough money to be able to retire that. I mean, that is consistent with the standard finance literature. But really, the question is, if we had invested these monies for productive purposes, then we shouldn't have a problem. I mean, 70%, if your debt to GDP ratio is 70%, it won't bother you so much, because when people point you to your debt, you can also point them to what you have used the money for, and the fact that the monies those projects will generate the much needed cash flow to be able to service your debt. I mean, then, because other countries have borrowed more than we have. But the point is that in the midst of all these borrowings, we still have huge infrastructure deficits, both economic infrastructure and then social infrastructure. And you actually need economic infrastructure to be available to actually link firms and individuals to economic opportunities, and actually acts as an important catalyst between economic growth. It's very, very important. But I'm not too sure. Beyond what we have been told, I think we need to do a little bit of an audit of our own debt stock and find out how we have invested these monies. At least we need to know. It will guide us to see which of those monies were invested in purely self-financing projects or commercial. And then we'll be able to determine our true burden. That when it comes to this portion really, then it means that this is where we are exposed. As for ABC, we have these projects, and therefore these projects...
You doubt you're doing that?
I think that because where we are, I think that we need a lot of information as to how those debts were actually invested. It's important. That message would at least calm some level of uncertainties in the market.
That we don't have doubts that we can actually invest the money and then get returns to pay off our debt, a fund that will mature in good time, self-financing projects, so that later on, like I had the head of budget from the Ministry of Finance here last week. He was telling me it's working perfectly. Everything is in place, because when it's time, they're not now going to go around looking for money to pay or borrow again to pay, because they are investing. He said it's strategic. That's what they're actually doing now. I took his word for it, but now you're casting doubt over that one, and I'm having second thoughts.
I mean, many of them call them reforms. It takes time for reforms to bear fruit. So if these things
it's a little too early?
It's a little too early. I mean, you can see the evidence in the media review, because the first Eurobond that was issued in 2007 will be maturing in 2017. I mean, there's no sinking fund provision for it. So now we are asking Parliament, and I'm sure Parliament has given its approval to go and borrow, essentially to retire that debt also, and maybe to also restructure part of our debt portfolio, and maybe a portion to also fund infrastructure. So we are saying that, yes, they may be doing something, and I want to believe that they are doing something, but I think that we are not seeing the fruit now. You understand that we are not, perhaps it's
but
early.
But you think they are good steps?
I think that they are good steps.
You just want to see fruits?
You need that framework to actually guide you, so that perhaps going forward, we know that the reason why we are going for a loan is because of this project. And I'm a little surprised sometimes that we take time to go and arrange for a loan before we come and decide what to use it for. And sometimes we will hold a press conference to assure Ghanaians that the loan will be used judiciously. I want to believe that it's the type of project that determines the type of financing that you also go for. So that you go for the money, because you would have done your own capital budgeting analysis. You understand that suggests that this is the amount of money that we actually need. We are going for that money, and we are investing it in that
specific area.
Yeah, beyond that, we do spend. But I think something that we also have to look at, and which cuts across a number of governments, is that we are unable to derive sufficient efficiency from our public investments.
Okay.
Okay, through perhaps...
Why is that?
Through perhaps contract overvaluation, sometimes shoddy work, and all of that, and lack of institutional framework that should guarantee that public investments are actually managed very well and are efficient in terms of getting experts to even do the analysis and all of that. So, I mean, studies have shown that almost 30% of public investment in our part of the world goes waste. Yeah, inefficiency in that. So once you have that, then it means that you will still be spending on project, but you will not realize the economic benefit from in there. Yet you would have gone. You would have gone for the loan. So I believe that we have, it's an opportunity as well for all of us to actually sit down and perhaps evaluate how we have done things in the past that didn't work.
Okay.
And I believe that many of that, perhaps they are taking it on board, but the pace is also an issue because right now we don't have the right framework to be able to do many of the things that we need to do actually to move our economy forward.
Do you think we lack the framework, or it's just pure inefficiency?
Well, I think we lack the framework. Essentially, if you are the debt problem is now evolving, and now you are now going to create a sinking fund to solve the problem that started as early as 2007.
There's a backlog.
Yeah, there's a backlog here. So, and even that, the fund depends on the stream of revenue that comes from the productivity of the project that you invest in. If you look at the evidence, it is clear that the loans that the money that we are borrowing, we are not using it to invest in projects that are highly productive and self-financing.
Why is that?
Well, it's government priority and politics, essentially. Because
I'll take politics over government priority because government priority should be our priority too. But if you and I don't see it as priority, it shouldn't be.
Yeah, that's the point. And if it's politics, because you are investing to get electoral fortunes. You are investing in social projects that has not yield any returns. You are borrowing and training people to repair mobile phones. How is that going to yield returns to pay the loans that you have borrowed? So there's a problem here. So we need to, yes, now you have created a sinking fund, but we need to invest in projects that are highly productive and self-financing, so that we can pay back the loan when it matures.
So you just don't want a sinking fund. You want us to invest it properly.
Essentially.
In a way that will get returns.
Yes.
Why do you know that and the finance ministry doesn't know that?
Well, if you look at if you look at the minister's argument, the minister is arguing that we are investing in cocoa rows, that they are arguing, and we are arguing that they are arguing that the cocoa row will generate revenues and externalities that will pay this loan. But there's a problem here. You are borrowing to build a road. On average, to complete a road in Ghana takes about 4 to 5 years, and the loan is what, 10 years. Now you borrow and build a road, 5 years of the loans period will elapse. You have to pay back in 5 years' time. Within that 5 years, the road that we are talking will not be able to generate the revenue and the externalities to repay back the loan, and this creates a maturity mismatch here. Okay. And when maturity mismatch happens, the government will be forced to
get the money elsewhere,
to borrow again to repay the loan, and this creates the cycle. Which this is the debt overhang effect. But
the two of you agree that we are not the first country borrowing. So your problem is how we use what we borrow.
In fact, from the 1930s to 2001, the British debt to GDP ratio averaged over 120%. And it was not a problem. Why? Because they invested in what? Project that can refinance the debt. That is the argument. There's no mechanical threshold to when it's 70% you can't borrow. No. you can borrow over 100%, but the point is use it in projects that can refinance it. You can't just go and throw it in social basket and you think they can automatically generate revenue to pay. No, it doesn't work like that.
Nothing
you have to invest. It applies like an individual. When you borrow, if you're a businessman, you borrow, you make sure you invest it in a project that will what? Generate enough of it to pay back the loan. The same principles apply at the government level.
It's a basic principle.
It's a basic principle.
So we will take a break from here and then we'll come back and talk more about Ghana's skyrocketing debt and how to manage it on PM Express. Welcome back on PM Express. We are still talking Ghana's debt stock and how to manage it. I have with me Emmanuel and Godfred in the studio. Okay, so let's talk now about the Eurobond. How does that help us solve our problems, our myriad of problems?
First of all, it helps you to overcome what we call debt repudiation, that potentially you will not default when the first Eurobond matures. So at least you are assured that once you do that successful issue, you will be able to retire that particular debt, because it doesn't send the right signal to the market that you cannot pay your debt. And if you look at our public debt stock, there is the domestic component. Usually it doesn't worry people that much, because you know what, the government will not default, because at worst they can print more cedis to pay the domestic debt. And once they print more cedis, the associated inflationary pressures will be there. So effectively what they have done is to pass that burden from the state to the people, and that effectively represents a form of taxation on your income. But where there is a challenge is the external debt, because you can have homegrown policies, but you cannot have homegrown dollars. Dollar must be earned essentially through exports, and that is why, to some extent, I'm happy that the Debt Management Committee is realigning the debt composition more along the lines of external debt. That is to free up capital for in the domestic capital market, so that we will not crowd out the private sector. We will now crowd them in. But you also realize that the success of that depends on how well you manage your exchange rates. And also you realize that when your foreign earnings align very well with your foreign debt, you are protected. Okay, but because usually we don't have control over the terms of trade, essentially, okay, in the slump in commodity prices, we are exposed, because really then we can't generate a lot of dollars. And that is why issuing the Eurobond is very needful.
So you're looking forward to the third?
Yes, I would not say no. Given the fundamentals of our economy, we don't have the money on our own to retire the first Eurobond, for which reason it's important we do that. Beyond that, I think that they're also looking at using a certain portion to also restructure the domestic debt. But really, a country that has huge infrastructure deficits, that is a constraint on doing business. If you don't borrow, you can't really make progress. If you ask me personally, I believe that we have to be able to, maybe like I said earlier, do an audit of the existing debt stock and see which projects on their own strength could attract funding. And I believe that they are looking along that line. Because where we find ourselves is not really a comfortable zone with that limited borrowing space. And that is why you can understand that the physical consolidation that they are doing is more along the lines of front loading, trying to really reduce the physical deficit within the shortest possible time. Because apart from really growing your economy, another way of achieving debt sustainability is to reduce your physical deficit, because physical unsustainability and debt unsustainability are twins. They are intricately linked. So if you can reduce your debt deficit, your physical deficit, then you'll be able to also reduce your, or bring your debt to a more sustainable level. So those are the issues. And then you're also looking at the interest cost and all of that. So the way where we find ourselves. Yes,
the third Eurobond. But how profitable have the first two been?
I said earlier that we need answers from there as to how we have used those ones. You understand?
The first two.
Of course.
But you're looking forward to the third one, so I expected you to give me a profitable answer as well, not looking forward to us doing something, audit or something about it.
Earlier, when I used the word belief, you didn't side with me.
Now I am understanding where the belief is. But Emmanuel, do you think it has been profitable? He may have the answer.
So first I want to touch on why we are going for the Eurobonds. I mean, in 2010, this government wanted to create a geopolitical impression. So what they did is they rebased the GDP from the 1993 constant prices to 2006 constant prices. And in doing that, they rectified some undercounting in the banking and telecommunication sector. This automatically increased our per capita income from about $800 to $1,300. And this put us in the lower middle income zone. And now you have IDA loan, International Development Assistance loans. And these are concessionally loans, and you can borrow it at about 0.8% for about 35 years. Now, but these soft loans are for poor countries. So when we rebase our GDP,
a lower middle income,
we moved to lower. We didn't qualify for these IDF loans again. So we were forced to look for bilateral loans and Eurobonds. Now, if you look at the bilateral loans, we try loans from China, and you know these loans, you call the middle loans, they are not. The creditors also will do a rigorous analysis of the project that you are investing in. We started with the STS loan. STSD was not successful. Started with the CDB loan, wasn't successful because these creditors will look at the viability of your project before they want to go into agreements with you, and we have failed in all those areas. So we were forced to go for Eurobonds. We will just issue it, and Eurobonds is about 8 to 9% interest. This is very high, and the maturity is 10 years. So the profitability comes in here when you invest in very strategic project that will quickly generate revenue to repay the loan. It will not be profitable. The Eurobond will not be profitable when you don't invest in this project that I'm talking about. So strategically, you have to identify.
Which project would you have suggested that we invested our first Eurobond or second one in?
Interestingly,
you have specifics?
Interestingly, you have enormous manufacturing capacity in Ghana. We produce a lot of primary products that European countries don't have. We can start thinking about value addition. You know, chocolate. We don't need to import chocolate into Ghana. We must add value to our cocoa. We must add value to our wood. We must add value to a lot of these primary products before you export them. If you just export it raw, you have problem because already you'll be exposed to the volatility on the world market. You get the point.
Yeah, it does.
So it is very important that we can go for Eurobonds to fill in the infrastructure gap, which will help our development. But in doing so, we should also identify projects that are viable, that can quickly support in the repayment of the loan, or that can generate revenue that we can put into the sinking fund and generate the returns on investment that the minister is talking about.
So far, you've not seen anything?
So far, I've not seen any.
Eurobond 1, Eurobond 2.
I've not seen anything.
That's why expecting 3.
I think this is the 4th or 5th Eurobonds that we are issuing. We issued one in 2007, 2011, 2013.
Okay, so
and I think even 2014.
So you've not even seen anything.
We don't see any project.
How many
that is
we have
revenue.
Already issued, and we are going again.
We are going again. So this is a problem.
Is it a way out for us?
I think that the current government as well as the past government have given some information to that effect as to how many of these loans have been used in the hydrocarbon production, in the gas sector.
A profitable venture?
To some extent, yes. To some extent, yes, because you can see the energy deficiency, the costs. If we could provide energy for every Ghanaian.
Don't even talk energy.
I mean, reliable power supply.
It's a very delicate
yes, I mean,
issue.
You understand that? And government itself is having to pay a price for that darkness because it's affecting their own revenue envelope as well. If you guarantee people that reliable, so it doesn't have to be that we'll go for a loan and maybe perhaps say that maybe we want to go into manufacturing government necessarily, because I don't believe that government can do a good job by setting up a factory on their own, because it may work in certain countries.
You mentioned the private sector.
Yes.
You were hoping they would
so
be crowded in instead of out.
What you do is to use those debts for productive purposes and create an enabling environment that enables private sector leadership. Okay, so if you look at the whole IMF document, you could even summarize it with just 3 words. What are they talking about there? Private sector leadership, infrastructure investment, and then productivity enhancing reforms. These things have to be financed. So what you do is to create an enabling environment, roads. I mean, as we sit here, there's only one way to go to Cape Coast, where we had our former capital. I mean, and look at the amount of hours people spend in traffic just to go.
We've tried our hands at some things, but it didn't work.
So when we talk about the enabling environment, we're also talking about perhaps firms, private sector, being able to borrow, having access to credit, and the cost as well, because we live in a globalized environment. You understand? We are competing with people, I mean, from China and all of that. I mean, today, whatever you find on the market is perhaps that in itself, that is just evidence of how perhaps uncompetitive we are becoming, and all of that. So even though you realize that our CD depreciates, we could actually capitalize on weakening currency to boost exports. We might not be able to achieve that from what theory professes, but you realize the reason you might not be able is because it doesn't depend only on the exchange rates. You understand? You want to be able to guarantee that enabling environment, and I believe that that is what everybody is talking about. That is what government is also talking about. Many of these reforms they are talking about, perhaps the pace and the efficiency along those lines, we haven't been doing well compared to our peers.
Do you think our creditors have lost hope in us? He's looking at you, Emmanuel.
I do not think so. I do not think so.
Really?
I do not think so. We haven't gotten there. Even Greece has hope.
Even Greece has hope.
Greece has hope. And the fundamentals are different. We are under an IMF program. And I think the IMF has that credibility. And what is also good is that government has shown that commitment, I mean, to go by the program, because the program itself is also inconveniencing government. Okay, the fiscal consolidation, the adjustments, you understand that we are going through, I'm not too sure it's something that ordinarily
it's not a pleasant thing at all.
They would want to do, but it's a necessity now that we needed to go through, and these are present trade-offs or sacrifices that we have to make in order to maybe preserve the medium-term prospect that we all agree, both those in government and those in opposition, that our medium-term prospect is bright. But how do we preserve it? How do we take advantage of that? Then we are saying that you will need certain fundamentals. One key fundamental is macroeconomic stability, which is then a prerequisite for growth. We didn't have that. To have that, you have to pay a price. And the price we are paying is the fact that we are giving up growth. And when you give up growth, you're also giving up employment. You understand that? And it's much more serious for us, because for us, we are like Liverpool. We never walk alone. We never live alone. Because, you have one person working, and so many people, their breakfast, lunch, and supper is from that. Person. So when that person loses his or her job, so can you imagine?
Their daily bread.
You understand that? So that is why we are saying that.
On that note, we'll take a break and then we'll come back and you tell me if you think Ghana's creditors have lost hope in them. We take a break from here. You're still on PM Express. We're talking about Ghana's debt stock and how to manage it. And perhaps if we have alternatives around it, we'll see what to do so we can pay off our debts without borrowing to pay again. But you can join us from wherever you are. You can join the conversation and give us what you think, share your ideas, your frustrations, and even your questions with us. And we'll see how we'll manage around it. So you can call us on 0302 211-701 or 702-703 and 704. We're ready to take your calls. You can call in now. But Emmanuel, before we went to a break, you were talking about the investor confidence in Ghana.
Well, for creditors, they have not lost hope in us at all.
Amen.
Because it favors them.
Mm.
Now, if you look at the returns on lending, if you are a bank or an investor, you lend money to an European firm or a North American firm. On the average, you don't earn 8%.
Okay. You
are earning about 1%, on average 1%. So if our debt deteriorates, it means we are going to what? We are going to borrow again. We are going to re-borrow. We are creating a perpetual system where you have to go and borrow again
to pay
your debt. So it helps them. So at the end of the period,
they are feasting on us.
Yeah, then it helps them because at the end of the loan period, they are getting about 8%, which they don't get from investment in Europe and Europe. So they are
having a field day on us.
They are having a feast on us. So they haven't lost hope in us.
We have Charles on the line. Charles, hello, Charles.
Hello, madam.
Welcome to PM Express.
Thank you for having me.
Where are you calling from?
I'm calling from Sapa.
Okay, you can go ahead.
Okay, thank you. You know, this issue that you are talking about how to sustain our debt in this country. We all understand the frustrations of the government, and we know how difficult it is for all Ghanaians to engage in this situation. But the concern of an ordinary Ghanaian is to see this manifesting in the economy. It's not continual borrowing that has been a fund for Ghana, but we want to see the infrastructure that the government says that is investing the loans and that we are taking into. Because already we have engaged in ourselves in a, how do you call it, that didn't hear you speaking. Now, if you are continuing to borrow with a view of shifting the debt that we have already incurred, then what other infrastructure are you going to put this current loan that you are taking into? Because you are taking the loan to service a debt.
So obviously you are not investing it into the economy.
Into the economy. So how is the ordinary Ghanaian going to benefit?
Thank you very much. Thank you, Charles from Takwa. We also have Eric on the line. Eric from Doma. Hello, Eric.
Hello.
Hello. Eric, go ahead.
Good evening and good evening to your panelists.
Yes. Good evening.
Yeah, please. My contribution is that, in fact, it is very bad for we to continue borrowing, come and service our debt. In fact, if that happens, it's like we are just going around.
In circles.
It's like a circle. You go and borrow the amount that we are going to borrow also has an interest on it, and we are not coming to use the money to embark on any productive venture, but we are using it to settle a debt. And it's like we are just making a good step. We are just what we are pleading is that, in fact, our leaders will take pragmatic steps.
Okay.
And in fact, identify some major productive sectors in the economy
that they can invest in.
All what we are talking about is about leadership. It's a matter of leadership, because if we have strong leaders, visionary leaders in the country, those leaders will be able to identify the productive sectors in the economy and set the standard.
Okay, Eric. You think they are not strong leaders and so they are not seeing what you're seeing. I hope they hear you though. We also have Zion on the line. Hello, Zion.
Hello.
Welcome to PM Express.
Thank you very much.
Where are you calling from?
This is Zion from Wa.
From Wa. Okay, go ahead.
Thank you. I think my good friends have dealt with the topic seriously. Doctor is doing well. But my point is that we know, even if it is sole proprietorship, partnership, or company, or even a nation, one of the sources of getting money is through at least borrowing.
Okay.
But one must not let go from the fact that if you are borrowing, you must know why you are borrowing. If you are borrowing for capital investment, where you think you can recapture the money in the shortest possible time, I think there's no harm for us to complain.
Okay.
But if you are borrowing for things like,
borrowing sake,
excuse me, for borrowing sake, things like, excuse my sister, pad, where are you going to get the money to pay back? If you are borrowing just because you want to borrow for salaries, especially like use 25% of your GDP to service your loan, 50% of your GDP for salaries, they will pressure on you.
Okay. Thank you very much, Zion.
We will do to manage this borrowing is to revisit our constitution so that we will have budget line or period or limit whereby a government can borrow. But if it opens like that, you will borrow and borrow and borrow. You know, even if you don't pay, a certain government will come and they will pressure on it.
Okay. Thank you very much, Zion. Thank you. Let's move on and talk to Raman. Hello, Raman.
Hello.
Welcome to PM Express. Where are you calling from?
I'm calling from Darut.
Okay, go ahead.
Actually, I'm just enjoying your program. And I've listened to the submission of the two gentlemen there.
Okay.
And Emmanuel.
All right.
Borrowing essentially is not something that is bad. It's very good. But even as an individual, to do something good for yourself, that you don't have capital, you have to go and borrow. But the fact of the matter is, what are we borrowing to do? You see, you just be there, you listen to, you hear that, or you know they are borrowing, issuing bonds, getting the money, and they are not putting it where we are supposed to get the needed returns. So it's not helping all of us. We are not saying nobody should borrow.
But you want us to borrow and use it for something profitable.
And use it well. You can't borrow in 2012 and use it for campaign.
Okay.
Where do you expect to get the money back? Is it am I the one who is going to give you the money to
Obviously,
pay back?
we will pay the money. Thank you very much, Raman. So you heard them. It's like many of them are frustrated because it's basic.
I'm very pleased with the interjections that they are all making. I believe that they are getting, the awareness is being created. People are making intelligent contributions. And because leadership also respond to what the people ask for. So once we all get enlightened along these lines also, I'm sure that together we can make progress. So it's important. We all acknowledge it's not a comfortable zone, not for anybody. But I also think that if you look at the World Bank facility that government has secured, is effectively to undo the risk that we carry before we even go to the market, so that perhaps could moderate the rate at which perhaps we will borrow. But certainly there is a price that we have to pay, because we might not issue the Eurobond at a rate even comparable to maybe our peers in the sub-region. And when it comes to dollar-denominated securities, even a difference of 2% is significant enough. You understand that? So I believe that even though we are going through some financial crisis that seems to threaten the very health of our economy, it also presents us with some opportunities to actually look at our economy.
And options.
Yes, and look at the various options. And I believe that as everybody is asking relevant questions now, they are not saying that don't borrow. Ghanaians have moved on. They are asking you, what did you use the money for? I mean, people are now teaching finance. Okay, borrow for productive purposes, and I'm sure.
We are wrapping up. So, Emmanuel, your final words.
Yeah, I think the contributions that came in are very enlightening, and I'm happy to hear those coming from the ordinary Ghanaians. You know, as Doc said, Ghanaians have moved from the question of why are you borrowing to what are you using the money for. So, I mean, this is what we are doing. We are creating the awareness for the ordinary Ghanaian to ask these important questions so that government will be pressured to do the right thing. You don't sit down until you are in a problem before you start creating the sinking fund. When we Ghanaians wake up and we start asking those questions, hold government accountable, I think the government will respond to us.
Thank you very much, gentlemen, for joining me in the studio to talk about Ghana's debt stock, which you think is sustainable or not sustainable.
I think that if with the right structures, we shouldn't have too much problem. I think that, like I said earlier, we are
sustainable or not sustainable?
That would depend on some other factors.
Sustainable or not sustainable?
I mean, it's very difficult to answer this question.
Depending on the right structures.
Depending on the usage.
Okay.
So hopefully, now that the government is restructuring and doing a lot of reforms, we are hoping that within the medium term, the debt will come down.
Thank you very much. I have been in the studio with Dr. Godfred Bokwing, who is the head of finance at the University of Ghana Business School, and then Emmanuel Bwedi, who is from Imani. Thank you very much for watching PM Express. Good night.